What's up guys, Dirk here. It is Friday, September 9th. I just want to give you a quick update on the short-term chart of Bitcoin and what is happening. So Bitcoin is currently trading at $20,700, so it has had a nice pump, and I want to try and explain to you the setup that could have helped you predict that, which by the way I did share this in real time in my VIP Discord group, so if you want to join that, the link is the second link in the description down below. I actually also ended up sharing this on Twitter, and that is also free to follow, so the link is in the description down below. By the way, if you're new to the channel, welcome. Please subscribe down below, click the notification bell if you want to get on my email list. It's the first link in the description down below. So okay, what we have here now is the 4-hourly chart. I'm going to try and explain this to you in a way that is pretty easy, and if you learn these setups, it will benefit you in the long term because they work over and over again, whether it's a shorter time frame, whether you're looking at 5-minute charts or 4-hourly or daily or weekly. Obviously the time frame is different, but the patterns and the setups are the same, and they allow you to identify trend reversals with a high accuracy hit rate. So as you can see, what we have over here, this is probably the highest probability reversal indicator that I know. It is the RSI divergence. It's very simple. When the price makes lower lows, but the RSI indicator, just the default standard relative strength index indicator, when it makes higher lows over here, while the price makes lower lows, that is called a divergence, and usually it indicates that this is not going to give a continuation to the downside, but instead is going to see a bounce, potentially even a complete reversal, but sometimes just a shorter term bounce and then a continuation due to this divergence. Now, if you remember, I actually made a video on the channel. I will link to it down below or up here on the channel a couple of weeks ago in middle August, where this pattern, if you go on the 12-hourly chart, let me change that for you. If you change this to 12-hour, this exact pattern showed a negative RSI divergence here while it was making higher highs. So again, that when I made that video in real time, that ended up being the top because it just didn't confirm the upside continuation. The RSI was telling us, look, the strength is getting weaker, even though there's these pushes with the price going higher, and that was a signal for much lower, and that ended up taking us from 25,000 to just about 18.5. Okay, so over and over and over again, these RSI divergences, you want to watch them because it helps you identify when a trend is potentially running out of steam and when it is about to reverse, and in combination with other signals or indicators, you can then make better decisions on when to buy or when to sell. So I made that video in real time right around here on the channel. You can check that out, and we got the sell-off. Now we got the opposite on the 4-hourly time frame. We got the bullish RSI divergence, and as it happened, it literally moved higher. So just to show you real quick, I posted this in our Discord in real time, so in the members VIP Discord. Again, if you want to join, it's the second link in the description down below. 60-day money back guarantee. Come and join us. You get all these updates and analysis and everything like that. So basically, I shared this in real time. I shared this bullish divergence. I actually said here, so actually this range is still in the 4-hour fair value gap from the June lows. Major bullish divergence coming into it this time when we tapped it, so maybe this was the bottom. We're going to see a big bounce. Based on the concept, it's possible. There's a 4-hour value gap up there at 22,000, which would then potentially be the target. Putting aside any bearish bias and forgetting about the state of the economy, etc., purely based on this chart, it would be worth a long with an invalidation dropping below the fair value gap at 18.5, and that is when I posted the setup when it was at $19,152, $19,152. That was when I shared this, and as you know, now we're at 20.7, so that was completely valid. So let me explain how this works. So we obviously have the bullish divergence, but that on its own is difficult to make it work. Let me get rid of this one real quick, because if you only rely on the divergence, it's hard to know when to enter because the divergence is already present here at the 2 tabs. But if you're not combining it with other indicators or other levels, then you might enter too early. For example, if you longed here, then you get one more drop down and you might have got stopped out if you're using tight stops. But in combination with other indicators, and especially using, for example, fair value gaps or imbalances, or just simple support and resistance or supply and demand, if you match that divergence with with one of those things, then it gives you more confidence, it gives you a higher probability setup, and then you're able to take a higher probability trade or position. So in this case, the fair value gap, and by the way, I have a complete technical analysis course explaining all of this in detail, over 30 lessons inside my VIP membership. It's part of the Discord. Everything is part of one thing. So if you want to join and you want to learn about this stuff more, second link in the description down below. So the fair value gap, or an imbalance as it's called, is when the price, you can see over here on the left, right over here, when the price jumps through a certain level. You can see the top of this candle over here, this little red wick over here, and then the bottom of this wick. Between those, there's a space, and that is called an imbalance or a fair value gap, and this is on the 4-hourly chart. So you can see this exact level. I've marked it with this kind of red rectangle over here. What tends to happen is after a low is made, it works obviously in both directions, vice versa, but in this case we're looking at after a low is made, price goes up, and then often it comes back to test this fair value gap, and then you can set an alert and potentially enter a long position. Now you don't want to just blindly enter a long position, you do want to wait for confirmation. So basically the strategy is when it enters there, you set your alert, you look at the price action, and you would zoom in on the 1 hour, the 50-minute, the 5-minute chart to see if it is bottoming, and then you would have a stop just below the fair value gap. So in case it's invalidated and the price completely breaks down, you obviously don't want to be longing. So you want to have a tight invalidation below the fair value gap, and then if you're right, well, the upside continuation is pretty high, and you can get very profitable trade setups there with 1 to 3, 1 to 5, sometimes even 1 to 10 risk reward and more. And as you can see, this is exactly what happens. We have the 4-hourly value gap over here. This was the final wick low in June, right? So after that we bounced, we ended up testing it, right? Spent some time here, but almost perfectly into the fair value gap, and then we bounced again. So if you're taking a nice long over here at 19K, it went up to 22K. Then it came back down again, wicked into the same level, the same fair value gap level once again. And again, after that wick, even if you had entered here at like 19.3, 19.4, obviously you had the run all the way up to almost 24, and that would have been a very profitable trade setup. So we had the run up over here. Let me zoom out a little bit. We had the run up over here where I made that video where we got the 12-hour bearish divergence. This was a sign we were running out of steam, and okay, at this point you could have exited spot positions or reduced or potentially even taken a short, and we rode it all the way back down. And where did we end up going to? Well, exactly back into this 4-hour fair value gap, the same level over here. And what's interesting to notice is that we got this major bullish divergence, and I say major because it had been forming since 19 August all the way to 6 September. So this is literally a 4-hour divergence that has formed over the period of about 3 weeks right into the fair value gap zone. And at this point, obviously we wouldn't want to blindly enter. We'd set an alert, but we become aware of this potential setup, and if we see signs of bottoming like we see over here, we got this little wick and we got back above it, and that's also when I shared it yesterday in the VIP group, and also shared it on Twitter. But this is exactly the setup. So we had a potential long here, invalidation if it breaks below the 4 value gap. So if it would have continued down below and it would have closed below this fair value gap, that wouldn't have been a valid 4-hour setup, or this based on the divergence in the fair value gap. It would have been invalidated, and at that point it might have completely broken down. But since we didn't get that invalidation, since we didn't get closes below the 4-hour fair value gap, instead we got this upside, and we got a huge spike, because this is what tends to happen too. A lot of people are expecting the breakdown, right? And we were expecting all the way lower. Lots of people were positioning short at these lows, and that is when they catch you off guard, because there is so much money being bet on downside that if the market squeezes and it pumps, all those people get liquidated, or they have to they're forced to close their positions, right? So that leads into this squeeze. And as you know, on the channel, you can go and look back too on the monthly and the weekly charts. I was bearish, and I still am on the larger time frame until proven otherwise. That's the thing with this technical analysis. You can have these biases, but I think you should always follow the charts. And when the chart is indicating that something is about to change, then you have to simply change your bias based on the setup of the chart. There's no emotions involved. There's no ego involved. One day you can be short, and the next day, if it looks like it's going to change and it's based on the setup, then you can flip to the long side. That is how these markets work, and that is how trading works, and you have to become more flexible about how this works. So once we get to this point, we have to be open to both scenarios. If it does break down and it closes below it, sure, then we can stay bearish and maybe it goes a lot lower. But if it doesn't, due to the setup, due to the bullish divergence, in combination with this fair value gap, if it shows us it doesn't want to break down, why would we want to continue shorting at this point? And we might actually just end up longing, which exactly is the case. So what do we have right now? Well, we have this pump up as expected. It took out the highs over here. So people who were shorting over here, who put stops just over this level, right? That's what a lot of retail investors tend to do. They tend to maybe short over here, put the stop right over here. Well, they just got stopped or liquidated when the price pumped to this level. Now, what we have over here, we actually have a smaller fair value gap over here. As you can see, tiny gap over here, but it's still valid, so maybe that one will act as some short-term kind of resistance. Then what we have over here is a larger fair value gap over here, same thing as here, so that acts as resistance when the price goes to the upside. So these are levels of interest to mark. See what happens over here. Do we pull back, and then do we head to the next one? Because again, here there are a set of local highs. There's going to be people who have shorted, who have their stops just over here. So again, running it into this fair value gap and getting just above here, that is also a very possible scenario, especially if you look also at what's happening in the stock market. I'm not going to do that right now, but there's also potential there for further upside, for a further squeeze. Also, Powell is talking, the chairman in the US, he's talking today, so maybe that causes some statement where we get some crazy volatility. That is a possibility. So areas of interest, I think this is just a smaller one over here. I don't think it's as significant. This one is more significant over here. So between somewhere 22,000 and 22.5, we'd want to look what happens if the price gets up there. Is it going to stall and reject, or does it break through? Does it flip this, get above it, and then we have to wait and see what happens? Because as you can see over here, this horizontal level here, about 23.3, that is a 200-week moving average. And as you know from my weekly updates and my monthly updates, that is going to be a very important level to watch. If the price of Bitcoin can flip and get back above the 200-week moving average with a weekly close, then we are potentially looking at, once again, this whole thing being more of a bear trap scenario, and potentially the bottom being in and continuing a lot higher. But that is a big if. That is only if we close weekly closes above the 200-week moving average. And as always, I will continue to update every week after the weekly candle closes to share my thoughts on that. So for now, there is potential for more squeeze to the upside. Let's see what happens if it gets to this area, this fair value gap area, 22 to 22.5, see what it does. And then keep an eye on the weekly close. Bullish, much more bullish, maybe not guaranteed, but again, in terms of sentiment towards what the charts are showing us, we get a weekly close back above the 200-week moving average, it's time to flip more towards the bullish side. As long as we still stay below that, this could just be a squeeze if we get rejected again, and we could still completely break down below these lows. But for now, this has held, and for now, short term, I would say there is still more potential upside. So again, guys, I hope you enjoyed this video of breaking down the chart. It's a lot more technical, but I hope it's also more educational, and it helps you understand how these markets work. Again, keep in mind, this is the 4-hour time frame, but this logic and this reasoning behind the price action and analyzing it, this is technical analysis, and it works on multiple time frames. It works on 5-minute and 15-minute charts, it works on 4-hour, it works on daily, it works on weekly. So understanding these concepts and understanding how to read these charts is very important, because it can help you make much better decisions on when to enter and exit your positions, which could obviously save you a ton of money. Because if you had known that this was showing a bearish divergence around 25k, you would have sold to spot. You could have bought everything back at 18 to 19,000 or 18.5 to 19,000 potentially over here, and you would have increased your holdings a lot simply by understanding how these charts work based on proven setups. It's not a guaranteed thing. It's not a 100% hit rate, but there are high probabilities behind these RSI divergence, and they work very, very well. So hopefully you enjoyed this. Smash the like button if you did. Share it on social media with your friends. Would like to get as many people as possible to see this. And if you want to continue learning more from me, like I said, I have a complete 30 plus lesson course on this inside my Intelligent Cryptocurrency VIP membership. And of course, there's a lot more included. I write a monthly newsletter. I do monthly video updates on market analysis. And you also get to join our private Discord group with over 1,500 members inside there. And I'm in there every day updating, sharing charts, sharing my insights, news, everything, answering questions. So if you want to join, it's the second link in the description down below. Click that, you can sign up. It's completely risk-free for 60 days. I offer a unconditional money-back guarantee. So sign up, join, come and learn, come and join the discussions. And if for whatever reason you're not happy, within 60 days you can get a full refund. There's no issues with that at all. And of course, if you like what you see, which I think you will once you join, then you're more than welcome to stay and be a part of the VIP community. So thanks for watching. Hope you enjoyed that. Smash the like button, subscribe. I will see you in the next video.